Welcome to PhillipCapital's weekly market watch. With the release of several important economic data, the forex market had seen much actions over the last month, with the US dollar taking a beating from the major currencies. Today, we have Mr. Joseph Tan, spot forex dealer from Phillip Futures, to share more. Joseph, with recent releases of corporate earnings, there has been heavy focus on the stock markets. Do we still see the opportunities in forex trading?
Ever since the credit crisis, we have seen US dollar under a lot of selling pressure, mainly due to the fact that their economic factors don't support the buying of the greenback. We see that the positive correlation between the dollar and the Dow Jones index had torn apart, and the US dollar is no longer following the index, which has been rallying these recent weeks. With this recent rally in Dow Jones, along with the major stock indices, we can see that the risk appetite is growing. This could be reflected in the FX market, drawing an example from the currency pair Aussie dollar. Comparing the chart with the Simsky, we can see the two instruments are positively correlated, with one major difference. That is, a long position in Aussie dollar earns you daily interest in carry. In fact, we should go long into other currencies like Euro, Sterling, Aussie and Kiwi, and go short on the US dollar. Follow the trend. This could be seen since the start of the corporate earnings report at the 8th of July, where Euro dollar and the other majors started trending up from July's low.
In view of the increasing risk appetite, what are your views on the yen and Australian currencies?
Of late, dollar yen has rallied along with the major currency pairs Euro dollar, Sterling dollar, Aussie dollar and Kiwi dollar. So for traders wanting to capitalize on directional trading, which for the current situation to sell yen, it might be good to trade crosses like the Euro yen, Sterling yen and other yen crosses, where the traded range is doubled. This, of course, is subjected to each trader's risk appetite. For Aussie, on the midterm, we call for a buy for Aussie dollar, minimum objective at 0.8450 and ultimate objective at 0.9000 before we reassess the situation again.
Looking ahead, where will the dollar be heading?
As pointed out by Bernanke, employment is still an issue on hand. Although we do not see big failures on the corporate at the moment, we expect the US market to continue slowing down, but at a decreasing rate. Hence, in the mid-term, it's likely that US dollar should remain soft. But in the longer term, the US market should recover at a steady pace, and that will bring the dollar back on track, where we should see the dollar appreciating.
Thank you, Joseph, for your time. That's all for today. Stay tuned next week for more market updates.